Welcome back. One headline that may have been missed yesterday. President Trump rolling back regulations in a big way, signing an executive order to roll back regulations by 75%. The housing market, among others, bracing for change under President Trump. The S&P Case-Shiller index of home prices expected in less than 2 hours, as pending home sales in December were up 1.6%. That made 2016 the best year for housing since the financial crisis. Joining us to talk about the housing market and regulations in general under President Trump is PwC Partner Mitch Roschelle. Mitch, good to see you.
Good morning, Maria.
Thanks so much for joining us. So let's talk first about the rollback of regulations. The president signed that executive order yesterday. With all of the talk about the ban on certain visas, it got hidden.
It was lost in the headlines.
Yeah, it was lost in the headlines. Your take.
So here's the biggest regulatory help or bump, if you will, for the housing market is going to be the small and medium-sized banks. Those are historically, if you think back to the savings and loans, historically who made mortgage credit available to local people. You put a deposit in a bank, you borrow money from the bank. That's the model that's very sustainable. And if we deregulate those institutions who have been sort of frozen out of mortgage lending because of the regulations and the compliance, then it's really good for housing. And
that's what he was saying yesterday, that the president plans to roll back federal regulations, cut them by 75%, and basically saying he wants to unleash business that may have been strangled by these regulations. The smaller and mid-cap companies is one area that he's discussed specifically as we await Linda McMahon to take over the Small Business Administration.
One thing about real estate is it's become a very local business, and developers and home builders are really small organizations. You think about the big publicly traded ones, but a lot of the homes that are built across America are small companies. And I just got back from Tampa. I was in Dallas. When I talked to home builders in those communities, they say local regulations are what's strangling them. So one of their challenges is for creating new supply of housing is the cost of land, the cost of labor, but on top of that is regulations, getting permitting, getting properties entitled. And if the overall theme of deregulation sort of trickles down to municipalities, that's a good thing for housing as well.
So you do think this cutback in regulation will trickle down throughout various areas of the economy and spur activity?
Yeah, politics aside, the hope would be that it would trickle down and small communities would deregulate a little bit as well.
All right, we'll see about that. President Trump, of course, had a phone call with Russian President Vladimir Putin over the weekend, indicating that he wants to stabilize ties with the U.S. The Miami Association of Realtors finds that Russia is the top international country searching Miami real estate. Isn't that interesting?
Well, interesting that Russia is on the internet searching.
Yeah.
that I found interesting. But aside from that, what's really interesting is this really isn't that new of a story. So the Russian investors have been looking at Miami for a while. They backed away when oil prices sort of rolled back and they maybe didn't have the wealth that they had. But if you look at foreign investment in U.S. real estate, it's really not a new thing. In fact, the more unstable the planet is, the more foreign investors try to rotate some portion of their wealth towards U.S. real estate. And because the condo market in Miami has a lot of supply and there's the ability to rent it out to other multinationals, the Russians, like many folks from different countries, are interested in Miami real estate.
Well, it's a good topic because for a little while there, and I know Miami was one area, but also even New York, you had the Qataris, you had the Russians, you had the Chinese, a lot of foreign investors trying to buy up real estate in America. Do you still see that, or do you think that changes with currency changes? I mean, the dollar is weaker today, but has obviously been on a run.
Currency, when we looked at it over time, didn't play as big of a role. It really tends to be what's the motivating factor for those foreign investors to come here. And when it's to find a safe place for capital, the currency is not going to be the issue. It's going to be how unstable their homeland is. And if their homeland is unstable, they're going to want to park money in the United States. The problem in some of the cities is the prices have gotten high, even for foreign investors, and they're willing to wait a little bit for prices to roll back.
So that's my next question, because it feels like real estate has kept strong, particularly the high-end real estate. What's your take on where the market is right now?
Well, the high-end market is still sort of overdeveloped and sort of maybe underabsorbed. If you look at the rest of the market, and the Case-Shiller is coming out in a couple of hours, we're going to see another year of, not high single-digit increases. And the reason is, here's the biggest issue in housing right now. I've talked on the show about affordability. The real issue right now is availability. A few weeks ago, or 2 weeks ago, National Association of Realtors came out with the supply of inventory of real estate. It's 3.6 months. That's the lowest level of new supply of homes on the market since 1999 when they started tabulating that data. That's a problem. We're about to go into the home buying season, and there's nothing on the market.
So even though prices are up, and a lot of people say things are still too expensive, there's only a finite amount of supply, so that's going to continue sending prices up.
Right. Basic supply and demand, and you can't buy something that's not on the market.
Yeah.
Right? So if people really want something, prices are going to get bid up, and then we're going to be back into this vicious cycle of affordability again.
Even though we are expecting home sales to be down 10% on new home sales and existing home sales down 2.8% in this report.
Yeah, I'm not worried about these reports. If you look at it
Looking
over time,
forward.
look at it over time, we're still buying homes, and again, credit could be looser. Credit could be a little bit of a help, but not too loose.
All right, we will leave it there. Mitch, great insights
Thanks,
as always.
Maria.
Thank you so much. Mitch Roschelle, PwC.